All right, today we're pulling back the curtain on a company that's quietly powering some of the biggest tech shifts on the planet. From an investor's point of view, we're going to break down EMCOR Group. That's ticker EME. So let me ask you a question. Think about the biggest stories out there right now. You've got the absolute explosion in AI data centers, the huge push to bring microchip manufacturing back to the US, and of course, the massive transition to green energy. What in the world is the one thing that connects all of them? Well, the answer is probably not what you'd expect. Deep in the trenches of these enormous, critical projects, there's one company doing the really complex, heavy lifting behind the scenes. And that company is EMCR Group. For anyone investing, this is what's known as a classic picks and shovels play. During the gold rush, the people who made the most consistent money weren't the ones searching for gold. It was the folks selling the picks and shovels to all the prospectors. EMCR is doing that for today's tech gold rush. So, what is EMCOR really? Well, they're a Fortune 500 company. But let's cut through the jargon. They're the ones who design and install the guts of a building, all the complex electrical wiring, the massive cooling systems, the plumbing, everything that makes a modern high-tech facility actually work. They are literally building the physical backbone that all this new technology runs on. Now, this is where the story gets really interesting from an investment perspective. EMCOR isn't just any old contractor. They are perfectly positioned at the center of three huge, long-term megatrends that are just supercharging their business. First up, the AI data center boom. This one is a monster. The power that AI needs is just off the charts, which means data centers require insane upgrades to their power and cooling infrastructure. And guess what? These incredibly complex, high-stakes electrical and mechanical jobs are EMCOR's bread and butter. And just look at the scale of this. We're not talking about a small market. The global data center construction market is expected to practically double in just 6 years, hitting nearly $500 billion. That is an unbelievable tailwind for EMCOR. Wave number 2 is the big reshoring of high-tech manufacturing. Thanks to new laws like the CHIPS Act, there's a huge push to build factories for things like semiconductors and EV batteries right here in the US. These facilities are incredibly sophisticated and need the exact kind of custom systems EMCOR builds. Just to give you an idea, spending on this kind of construction shot up over 70% in 2023 alone. And the third wave? The green energy transition. There's a fundamental shift happening toward all-electric buildings. That means everything from integrating solar and wind power to building out EV charging stations everywhere to modernizing our entire electrical grid. And with over $1 trillion in federal money being pumped into these kinds of projects, it creates a pipeline of work for years, even decades to come. Okay, so you've got these three massive waves of growth, but here's the thing that makes EMCOR really unique for an investor. They've built this special hybrid business model that gives them both explosive growth and a ton of stability. If you just take a quick look at where their money comes from, you see that while the big construction jobs are the main piece of the pie, more than a third of their business comes from something else, services. And this is the magic right here. Think of it as a company with two engines. The first engine is those huge, high-growth construction projects that are riding those megatrends. That's the horsepower. But the second engine is their stable services business. This is recurring revenue from long-term maintenance contracts. It's predictable, it's reliable, and it acts as a powerful defensive buffer when the economy gets rocky. All right, the story is fantastic, I get it. But as an investor, you know that stories are one thing. The proof is always in the numbers. So let's see how this all translates to the bottom line. First, we gotta understand one key metric for a company like this: backlog. They call it RPO. Basically, this is all the future work they've already signed contracts for but just haven't been paid for yet. For an investor, it's like a crystal ball showing you what future revenues are going to look like. And just look at this. Their backlog hasn't just grown, it has exploded. It's more than tripled in just a handful of years, shooting up to nearly $12 billion. This shows you that demand for what they do is accelerating at an incredible pace. That kind of visibility into future sales is exactly what investors love to see. But here's the thing, it's not just about getting bigger, it's about getting more profitable. A return on equity of almost 38%, that is just exceptional. That number tells you that management is being incredibly smart and efficient with shareholder money, turning every dollar of equity into serious profit. And you see that same story playing out in their operating margins. Historically, they were in the 5 to 6% range. Now, they're hitting a record 9.6%. It means they aren't just winning more business, they're winning better, more profitable business. That's a huge sign of strength. Okay, this all sounds pretty fantastic, right? Maybe. Almost too good to be true. And as smart investors, that's when we have to take a step back and look at the other side of the coin. Let's talk about the risks, and the big one, valuation. This scorecard really lays it all out. On the strength side, it's a home run. They're riding those megatrends. The backlog gives you visibility. Profitability is soaring, and they have a fortress of a balance sheet. But on the weaknesses side, well, at the end of the day, it's still a cyclical business. They face real risks from labor shortages, and here's the kicker. The stock's valuation has already shot up. And that really brings us to the quote that sums up the entire debate for anyone looking at this stock today. The question isn't whether EMCOR is a fantastic company, it's how much of that fantastic story is already baked into the price you'd have to pay for the stock. So let's just ask the question directly. After the massive run this stock has been on, is all this great news, the megatrends, the record profits, the huge backlog, is it already priced in? Has the easy money already been made? And that really leaves us with the one big question you have to ponder as an investor. Is this incredible, record-breaking performance just a temporary peak? Or, because of these huge structural shifts in our economy, has this actually become the new normal for EMCR? Answering that question is what it's all about.